Okay, good morning, traders. Today is Tuesday, October 5th. Mike Boutros on the horn with you. Welcome to this live intraday strategy webinar. Good to see you in the room, Aurelian, Jay, Kimberly, Steve. Great to see you all this morning. So can I just get a quick sound check? I've been having issues with the audio, guys. Just want to make sure that we're good on the mic. Hey, Jay, good morning. All right, cool. Thank you. All right, so it's an interesting start to the week. It slowed down a little bit. Obviously, we had that huge move last week. Into the start of the week, we were looking for the dollar to pull back a little bit, got a little bit deeper than we thought, but all the opening ranges are just coming into focus. So on the menu, we'll hit DXY, sterling, dollar yen, gold. From last night, Aussie, dollar CAD, and Bitcoin. Got to take a look at dollar yen and Swissy, see what that's doing, and a look at the SPX here as we open up the session. My list is not as long. If there are any other questions that you guys are specifically looking at, feel free to throw that on the message board at any time. Here is the dollar index. So before we get into where we were on Sunday, here is the weekly chart as it stands now, right? Last week, we talked about this in the webinar yesterday, broke above a major resistance zone we've been watching, and then capped out right at this huge inflection. The March low from last year, the September, October highs from last year, a 38.2 of the entire drop, and the median line is all right here. So obviously we pulled back before the close last week. We start this week in this key range. Support at 93.76, resistance at 94.65. We need to see a break out of this range for guidance. Momentum, by the way, right? This is the highest momentum read we've gotten for the year. It's either make or break here. It's either we start the quarter and the month really with the extension play of the breakout of the yearly opening range, or if this fails, that's your last ditch effort. So from 1,000 feet up, excuse me, dollar looks like it's running into some major resistance. We also highlighted yesterday in the webinar this 2011 trend line, right? Which goes all the way back to that major inflection. Again, all of these parallels have been instrumental in the turns for the index. It's now resistance. So possibility for a little bit of a give back here in the dollar, but broadly still constructive. So here's what it looks like on the daily chart. Nice probe into that 94.47, 94.65 zone last week. Here's the pullback. So the first area of support on the daily chart, last month's high, or I guess this is actually 2 months ago at this point, August high, 93.72. You've got the parallel just lower, right? There's that 93.40 region that you looked at in the weekly chart, those highs from earlier in the year. So you can envision a scenario again where you muddle sideways, maybe a little lower into the monthly open, set that monthly opening range. Ideally, if this were to hold here, your monthly opening range is set just below a key resistance. Okay, I didn't drop the monthly markers yet. I like to wait a few days so the charts don't get so cluttered, but here's your monthly open right here. So you can envision a scenario with a monthly opening range right below that key resistance zone, gives you a breakout, finally gives us sort of clear guidance. But man, what a rally, lightening the load here, kind of looking for direction on this dollar move. Here's the intraday chart, and here's what it looked like into the start of the week. Loved that we held that low, right? So we were looking in the start of the week saying, well, if this is a simple correction within the broader uptrend, this is 2 equal legs down. We're at the median line. Look for a reaction at 94, 93, 99. Well, here's the start of the week. Set up a quick range right there, broke as soon as we set up the US session, plummeted into support at the August high. It turned out to be the 1618 extension. Again, Jay, I think you pointed this out, right? Good confluence zone. Here's the rebound. Now, what is this? Is this an attempted breach of this descending channel? Is this just a bull flag? Can't make that assumption yet. On its face value, this is the simple weekly opening range right above uptrend support. We try to keep it as basic as possible. So you would need the breach above the median line to suggest continuation for the move higher towards 94.40s. Or if we break 93.70, you're actually at risk for a larger setback, larger correction in the broader uptrend for the dollar. Again, it's been a pretty dramatic ascent, almost 2%, more than 2% off the lows, 2.6. So Keep the powder dry. For $980 positions right now, don't feel the FOMO. I'm kind of with you. I'm flat as it were right now, actually. So I'm sort of looking for some new entries as well. Don't have anything here yet. We would either need the breach above, like I said, the opening range, the median line to get that thrust, or if we buckle below this, we're in for a bigger decline. Again, monthly opening range just taking shape. Keep some powder dry here. We do have non-farm payrolls on tap. So on Friday, we get those double whammy non-farm payroll Canadian labor numbers as well. Hopefully we get a catalyst to get things moving here. But that's DXY. Any questions here? Nice little range right at uptrend support. This is multi-week uptrend support. Let's see what happens as we open up the US trade session. Key support for the intraday, still down here. All right, that's number one. Number two, I'm actually gonna go into sterling real quick. I don't have anything on euro, guys, to say. I'm gonna throw it out right now. Here's what I'm looking at with the euro. I haven't updated you guys for a while on the intraday pages. Our last update for euro was back here on the 29th. Here's what it looked like, and here's what it looks like now. This formation sort of broke and was null and void after the break of 16. So I've added this one. Okay, here's what it looks like on the daily chart as well. Just from the high, low, high from July, August, September. It puts the 75% parallel at support last week. Here we are at the median line, very tight weekly opening range. So for euro, I don't like where we are on the daily. On the weekly, let me just take a step back. We're at big support. 2019 swing high. Big support zone we've been watching for a while. So I don't know what to do here. I'm not going to start pressing along on the euro yet. If you put a pistol to my head, again, all things held constant, I would like to see a larger recovery towards the upper parallels here to try to get back in a short. I think the dollar still needs to get that exhaustion, but it's a real tight range. So I haven't really been touching euro yet this week. We'll see how that resolves as we get deeper into the US session today, hopefully. But sterling, number three. Here's the British pound looks like. Big fake out. I talked to you guys about this yesterday in the webinar. Massive drawdown last week, plummeted right into downtrend support, and that's where we rebounded on the weekly charts. So that pitchfork off the high, low, high, median line support, that's exactly what caught the lows last week. And here we are back in that range. So again, when you wick out like that, it's not your favorite scenarios because the market's going to get a hangover, you're going to get some sideways chop action before you move. Here's what sterling looks like on the daily chart. So that consolidation, beautiful break to the downside, right? That multi-month consolidation that we were in. Failure, not at a major support level. Again, the weekly chart is what caught support on that low. We're using a different slope here. But here's the rebound right at major inflection. So again, this is key support. Guys, the objective month yearly open, the July low day close, former trend support. This is big resistance for pound today. Jay says was excited when it broke the 23%, which tested on July, but now it's nothing. Yeah, you kind of saw that fizzle out real quick. Look, at this point, I'm looking to see a reaction here today. Here's what the scalp looks like, and here's what it looked like as we presented it earlier. You know, that buckle back above the trend basically eliminated the immediate downside bias, and we were looking for a rally back into the yearly open, right? This is where you want to see failure if we are holding the downtrend. Well, we're there now. I wouldn't say we're seeing failure. It's not an exhaustive pump like this was. This is actually more so on the premise of trying to break out. So I'm watching for reaction here. I don't have any positions on this. I really just want to see how today reacts. If we breach and then we close back below, that's an exhaustion. I take a short against that high, trying to play the downside. But right here as it stands, you know, if we breach and you get some fuel on it, you're going to see 37.21 pretty quick. It's the 618 of the drop. A little bit later in the week as we close it out, it converges on the 618, right? So still cautious on this one, but looking to see that top side start to exhaust near downslope resistance just a bit higher. Questions on sterling? Okay, no major event risk out of UK this week, so continue to look for dollar price action to be driving this one. Here's our next update on dollar yen. So here's what it'll look like into the start of the week. Remember, we adjusted the slope. We're working with a couple different slopes on this. We really want to see what kind of reaction we got right at 111, 110.95, a 38.2, the 2021 high day close, big level. Here's dollar yen now. Kind of messy. The abomination falling back into abominatory procedures here. Here's the weekly open. You set a high, you set a low. Weekly opening range almost seems set. Now it's only Tuesday, but we've already made a test of the low, a high, and we've tested the high again. So we'll see how this pans out. This 618, by the way, needs a little stretch down to that new low. Resistance, 111.60 again. But I want to see how this resolves. On whole, one reminder again of where dollar yen is. We came off of massive resistance. The same resistance range we were targeting back in June. We clipped just the bottom side of that resistance before plummeting. Here we are again. This is huge. This is huge. So we're working on what would be a 5th consecutive weekly advance. We're at major resistance. And while I did actually have a short side position on this last week off that level, from here, you kind of want to, again, sit this out. If the rally fails at 111.60 and starts to come off, you start to look for that deeper cut towards 110.40. But at the end of the day, if we buckle back above that, I think it's the resumptive move. I mean, this is a huge level. So again, tight opening range. It's Tuesday, looking for some guidance here on dollar yen. Here's what it looks like on the daily chart, by the way. So late break of the monthly opening range back in September, pushed to close the month right at the high almost. Here's your monthly open for October. Tight range so far. If we fail at 1160 on the recovery, I still think you get 1040. But if this does hold, I think you rip right through. The broader trend is still very constructive. It's just that we've come into a major lateral level. Again, a wait and see trade. Yet the market will provide. That is dollar yen number 4. Gonna go right in order of what I covered yesterday, and I just want to jump right into gold because I think this one's so huge. What a beautiful rebound off of major support. I'm going to take you to gold from the start down. Here's what gold looks like on the weekly charts. Major support, 1738, 1747. We've been talking about it for weeks. It's 618, the advance off the lows he made back in August. It's the swing high they made back in April of last year. Decent pivot in price. Every intra-week break has still failed to close. So if we look at this again on a closed basis, there hasn't been even a scratch below 1738. It continues to put the focus on this critical region for gold. Now, I think we are going to see, guys, a move in gold, a larger move this month. The inflation story is taking deeper root, and it feels like the markets feels like all the financial news publications are like weeks behind us, right? For the guys who are in the trenches, in the markets, in and out, we've been talking about this inflationary concern for a while, how it doesn't seem so transitory, how you're seeing inflation branch out into every sector essentially, with the backdrop of rising energy prices. Anyone who says inflation is transitory, and you've heard me say this before, they're just going with the flow. They're just reading the news headlines, okay? The clickbait. It's all clickbait, guys. The inflation story for traders has been rude for a while now. It's just now starting to catch wind with the headlines. So I say this all because gold is your classic inflationary hedge. And even though we've been talking about inflationary concerns, you've seen that gold really hasn't caught that bid. But now you're starting to see the inflation story start to come to front. You've seen that broader equity markets have turned over. We'll go over S&P in a while, which means that the market's starting to catch wind of this. And if gold starts to catch that bid, we're at support. You can't be at a more critical level than we are right now. Okay, so that's why 1738, 1747 is absolutely paramount. If we close below this level, I'm looking for the yearly low. But until we do, man, we're at support. Here's what gold looks like on the daily charts. So the drop, here was the last update on gold, just to show you the weekly charts and the daily. We were looking at major key support right here, 1729, 1738. Again, a 1618 extension, which Jay pointed out, was here at 1725, catching the lows. We drove down. It was a little bit of a contentious, right, test, but look at the recovery. Major reversal candle right into resistance. We've been straddling this 38.2. The break of the downslope, maybe. Here's what it looks like on the intraday. Okay, I know this is kind of messy, but the only thing that I've added is this new pitchfork. Okay, so this was the start of the week, or this was, again, last week. We broke into that key level, ripped higher, and here we are at the 38.2. So we're basically just straddling this region. Last week's open has been support. I'm looking for this pitchfork, basic, low, high, low. Here's a 25% parallel. Support, now support. If we breach the median line, the 75% parallel is right in that key region, 1791, 1795. So looking for downside exhaustion, ideally ahead of 1738. Whoop, sorry about that. Ideally ahead of 1738. So ideally ahead of this low, which is the 618. That's the max I'd want to see any downside hit if we are heading higher. And then 17, like I said, a breach of the highs, look for 1791. But gold is at pretty pivotal support. And it needs to really hold its own here if we are turning higher. 1760s looks weekly pivot close basis as well, was the May high, November low in 2020. A little messy, but the 50 from the 2020 low. Jay, what level is that? 1760s? I see what you're saying. Sure. Lows that you made back here in June, actually the actual concerted June close low is 1760. You have those swing lows from back here as well. Yeah, I would say it's a low tolerance zone, right? We haven't seen too much price action sit there. It's been pretty much pivot or play except for this last month. So I do want to see a reaction here, right? Like I said, I think this is clear enough. Any downside, these are your two levels on downside to look for exhaustion if we do correct lower. Now, it's kind of hard to see it moving down there without seeing some at least dollar strength to give it that oomph, you know, but I'm not going to necessitate that. So we'll just see if we can't get that better move lower. I know this is a messy chart, guys. Let me just kind of clean this up if I can, but I do think the levels warrant some attention here. Any questions on gold? All right, that is number 5, Aussie. So we got the RBA last night, no change. Obviously, interest rates held at 0.1%. Not much in the commentary gave this thing a move, but we're continuing to hold this pattern pretty well. Here's what Aussie, wrong one. That's gold. Here's Aussie from last night. So I showed you this late in the session yesterday. I just wanted to highlight on the weekly chart what a pivotal region we're still under, or above rather, sitting on, right? The downslope for the entire pitchfork, we've been following off the yearly highs. We got that massive drawdown, which completed a 1618, recovered back into it, and now support is support once again. So the downside really, it's not welcome, right? It's not a good trade from a trading standpoint intraday because you're sitting at downtrend support. I want to short into downtrend support, but I'm looking for either the setback for the possibility to get back in, or if it breaks, I'm going to miss the drawdown, but that point you'll give you a concerted downside bias. Till then, you're sitting at support. Aussie dollar in the daily looks like this. Not as clean, but some slopes off the high of the year. a parallel off that February low, 1 touch, 2 touch, pivot below, pivot above, back as support, back as support. And again, your monthly opening range taking root right here. So I do have us at the 618 parallel of that formation we were following off the yearly highs. It's a tight trade, the weekly opening range, the monthly opening range, everything's super tight. So I haven't taken anything here yet, but look at it. It's still pretty clean. Here's your weekly open, tight weekly opening range right above last week's open. So that pivot in price continues to remain. Last month's open, 73.60 key resistance. If we were to get the correction, that's where I'd want to look. Clean up longs, look for exhaustion, possible reentries. But the immediate focus is on a break of this near term weekly opening range. Bullish and I mean, for me, if you're asking bullish invalidation, honestly, I wouldn't keep it too far away. 72.52 would be a break of the weekly opening range. I don't want to say that's bullish invalidation, but the near term, that would give you a downside bias. 72.22, I'd say, max. If the breakout is legit, right? Here's the down channel we were following in Aussie all last week. Here was another embedded trend line, really clean. You got like 4 touches, false break there, but once it did break, accelerated move, almost tested it as support on the way down, move off. If this is a break of the descending channel, breakout, test the support, you'd be looking for that extension towards 73.60. Till that happens, respect the break of the weekly opening range. Make sense? That is Aussie, number 6. Number 7, dollar CAD. Here's what the Looney's doing. This thing's wicked. Here's our last update on it here. You know, the funny thing is the break of support kind of looked really weak, like a meandering low here. You don't want to see that. When you break these key lateral levels, you want to see acceleration. Here's what it looks like now. You drop lower, a little bit of a rebound, almost broke back above, but here we are. So what does that convey? Here's what it looks like, guys. First, on the weekly charts, we talked about this breakdown. Daily chart showed September low day close as like critical support. We haven't quite made it there yet. Here's what the daily chart looks like now. Low day close. Here's that consolidation that we were following since last month. What do you do here? My focus on this trade this week into the start of October is for an exhaustion low off one of these 2 regions. A lot of time in these consolidation patterns, it's the false break on the opposite side that gives you the tell. So point in fact, if this were a false break here and then close back above, that's actually giving me an indication to look for a break of the upside. So I do think this is chop fest. I'm looking for downside exhaustion, either at the low day close, 25.20s, or 24.80, this zone here. Ideally, you get a failure here, but at the end of the day, you're still in the consolidation formation. So we're at the lower bounds of the formation. So logically, we're looking for that downside to taper off to exhaust. But I also think if we do get a decent exhaustion point here, it might be a decent recovery to play to the long side. So here's what it looks like on the intraday charts. Again, very tight range since the start of the week, guys. Here's that trend line slope. It's not on the intraday because I wanted to keep it clean. So I don't have it here, but this is the slope that you're seeing on the daily chart. Look for a break of the weekly opening range. Need a close above 27.13 to validate the move higher. Questions on Looney? Again, this is one that we'll be watching very closely into the close of the week as we head into non-farm payrolls and Canada employment data. Might be the catalyst we need to finally charge the brake. Questions on Looney? Pretty tight to start the week. Not enough there to get us excited yet. Okay, gonna take a quick segue to go along with this report and go over Bitcoin, because I think we're at a huge inflection range here. So it was a breakout, right? We talked about this yesterday. It was a breakout anyway. You sliced it. We had that confluence, or that consolidation zone that we were looking at. broke to the upside last week or last month, right into the close of the month. 618 broke right above the upper parallel. Once we broke it, look what happened. Support, support. Here's the move into big resistance. 50,092, 51,030. Big resistance. I want to see what happens into this zone. Now remember, 51,030 was the zone that we talked about all through the ascent earlier in the year, right? August, that's where it failed. Once it probed through in September, it looked like it was going to go straight to the moon, 57 and beyond. That only lasted a day before massive washout. And if you remember, this is when like Venezuela said they were going to accept Bitcoin as their like legal tender. So in any event, whether it was event risk based or not, here was the tumble. Here was the break of uptrend support. Again, we just missed the 100% extension. Not going to hold it against it. If we break 51,000, I do think that's the resumptive trade. So as far as the intraday chart is concerned, we're basically coming into a big zone of resistance. Obviously, a lot of people are going to be talking about the 51,000 zone inherently just because of psychological barrier there. But I'd be careful. I'd be careful in chasing this up here. Okay, momentum is still marking divergence on the intraday chart. That happens a lot in Bitcoin, but again, be cautious. This is a big zone. Questions on Bitcoin? Okay, it's number 8. We hit dollar yen. Really quick, a look at dollar Swiss. I kind of just pointed this out real quick yesterday, but wow, real massive turnoff, big resistance. This was 6786 retracement from the decline off the early highs. Multi-year downtrend resistance. The median line for the current operative uptrend. And the last 3 weeks have pretty been defined by that high. Momentum, probing 60. Here's what it looks like on the intraday. All right, let me show the daily first. Pretty clean. Basic 38.2 of the advance caught the lows. A little bounce here, but at the end of the day, is this going to be another corrective bounce before the correction? Or are we just testing uptrend support and you look for resumption? Again, by my part, I do think that you risk a little bit of a rebound here, a recovery, but ultimately just made a pretty strong defense of key resistance. So on this rally, I do think you get a little bit of recovery. I'd be looking for possible exhaustion to the 618 of that range, which basically gives you something close to the weekly open. So the weekly open is right here, 93.05. The 618 is 93.15. So sort of an area of interest I'd love to see. If the advance is going to fail, we're heading lower. That's where I'd love to see sort of an exhaustion before you move lower. Possible slope to the correction if we are indeed in correction. Again, it's too early to make that assumption, but possible slope in play here. We'll look to see if that offers any guidance on this pullback, or this bounce rather, in dollar Swiss. But pretty strong move off a pretty big resistance last week. See if we get any bounce off uptrend support. All right, fun time. Here's SPX. That was number 9. Here's number 10. 61 converging on the high day close. 618. Which one? Jay? You are just killing it. I'm loving your tactics. Yes. Yes. Absolutely right. High day close. Not only that, actually, you want to take it one step further, Jay. The high day close, my friend, converges on the monthly open, which converges on the 618. So you're looking at like 93.14 and 93.15 as a critical zone of resistance. Just below that's the weekly open. That's 93.05. So you've got a 10 pip region littered with resistance right around 93. Good eye. Well done, Jay. SPX. Here is what the SPOOS looks like. I'm kind of in disbelief that that pitchfork held. I kind of threw that on the other day just to see if there was any momentum to the upslope. I'd want to see support at that pitchfork. But here's the last update we gave you here. It was on the 30th. And what I wanted to highlight was this zone right here. We'd already broken uptrend support. We had tested former support as resistance. We were looking at this descending channel, and our exhaustion points were 42.90 into 42.71. Here's what it looks like. 42.71, the low was 42.72. Okay, right into the bottom of that slope before the rebound. So again, on the daily chart, here's the side-by-side comparison. Right? Boom, July low, close. Intraday chart had it looking like this. And here's what happened since. Once we grounded into that zone and we rebounded, the break above, and this is what I want to show you, the break above this channel here looked like a breakout. And we even started talking about that right into the start of the week. If this is a breakout, well, we probably got a bigger range towards the 618, look for a retracement. Yesterday's decline had me looking at this. And lo and behold, the lower parallel, support, support, support. This is what I'm looking at into the open of the US trade session today. I do want to see 43,000 hold. If this holds, then we're still on tact for a possible recovery. At the end of the day, we're still in the downslope. So if this does break, you're looking for 42.40. That's what I told you guys last week. That would be two equal legs. It would be a very nice level to which we'd find a little bit more of a stronger support bounce in SPOOs if reached. On this thrust, looks a bit tired. Again, it's still bearish below 43.78 essentially, but if we do break, that's where you want to look for a larger recovery, possible re-entry for this trade. But SPX is trading at a critical level into the open of the US trade session again. So I'm going to get rid of these lines, clean this up a little bit. We don't need that channel anymore. Look and see what kind of reaction we get into the US trade session today. And again, I know this is clustered up here, guys, but just so you remember, this is the July open, not so important, but the 1618 off the high. And then this is this month's open. So for all intents and purposes, we've straddled and set up a monthly opening range right around the monthly open. Okay. I do think SPOOs moves lower, just my humble opinion, guys. But the question is, how high do we get a recovery before we break? That's all this slope is meant to suggest. I'm not thinking that we're going to be in this all the way till we get back into the 4,500 mark. But even if this is just to break here, this formation will provide you some tell on price. So possible areas of interest on the rally, break below this would certainly be a little bit more detrimental for a larger move in SPOOs. We're trading at a critical level, guys. Non-farm payrolls on tap. Estimates haven't moved. Still looking for unemployment to drop to 5.1 on Friday. Print of 473,000 is expected. Okay, that's everything on my end, guys. Do let me know if you have any other questions or trade setups you want to look at. If you haven't gotten involved in anything so far this week, I don't blame you. It's been kind of tight. You know, I'm looking more, the ones that are on my focus and on my radar have really been what's going on in Aussie with this move here. I want to see a break of that range for some guidance. And dollar yen, although it's super ugly here, I do think it might be a fadeable event if we do get a rally higher. So those are the ones that are sort of right on my radar. Other than that, watch this Bitcoin trade and what happens today into 51,000. Again, the wave structure does look like a 5 extended. Use some caution here as we test this major pivot in crypto. All right, guys, we'll wrap it up there. I will see you on Thursday morning. I'm going to have an abridged version, guys, so be here on time. I'm only going to have a less than 30 minutes. I do have an appointment later in the day, so I'll open up on Thursday. We'll give a quick outlook as we head into the final part of the week. Best of luck trading, and I will see you then. Cheers.